All right, dear students, now we are going to do a question from your ACCA P7 past papers or AAA past papers. And this attempt is March, June 2021. So you can find this past paper on the ACCA website. And let me just zoom it a bit. Yes. So again, because you will be giving the computer-based exam, so you can see how the format of the exam looks like of the computer-based exam. On the left-hand side, there are exhibits that you will be able to open when you are appearing in the computer-based exam. So this is the audit completion review, and the second part is update and the draft auditor's report. We will stick to the completion and review. We'll not move to the audit report in this lecture because I'm expecting that when you will cover those audit report lectures from your web portal, then we will be discussing the report section of this question. Today we'll stick to the audit completion review. Okay, the requirement says you have the requirement A of 20 marks and then you have requirement B of 5 marks. And this is the word processor you will be using to write or draft your answers. It is July 20X5 and you are a manager in Beth and Company, a firm of chartered certified accountants responsible for the audit of the Matty Company for the year ended 31st March 20X5. The following exhibits available on the left-hand side on the screen provide information relevant to the question. Audit completion review provides the details of matters which have been brought to your attention by the audit supervisor. And then we have the update of the draft auditor's report. We are not doing that this time. We'll only discuss the audit completion review. Okay, so this is the requirement on the other page we have. And let's just zoom out a bit. The A requirement is using the information in exhibit number 1, which was related to the completion and review, comment on the matters to be considered, and explain the audit evidence you would expect to find during your review of the audit working papers in relation to the issues identified. And these issues are the railway operating license and going concern for 7 marks, purchased customer list for 8 marks, and then we have the chairman statement. Now this is the other information, basically discusses the auditor's responsibility in relation to the other information which you will be studying in the report section. So we'll just discuss the purchase customer list and the railway operating license and going concern. Now I hope you have watched the lecture from the web portal relevant to the completion and review stage, where you have the position of the review, that the audit work has already been performed by your audit team. And now what you're doing, comment on the matters to be considered. Like there are certain issues which has been brought to your attention, just like this said. Yes. Provide details of matter which have been brought to your attention by the audit supervisor. So you are at the completion and review stage. So there are some issues which have been brought to your attention. And then the audit evidence has already been gathered. So it says audit evidence you would expect to find in your review. So that why they're saying expect to find, because that evidence has already been gathered by the audit team and you are expecting that evidence to be there. So we will change the wordings of the audit procedure a bit, and I hope you have watched the lecture from the web portal. But in any case, let me just show you what I told you, that when we have the exam requirements, the matters question, that in your review of the audit working papers, comment on the matters to be considered. So basically, it's the first requirement. Now, comment on the matters you should consider. So you need to comment on the materiality. You need to comment on this materiality. You need to write the accounting treatment of that issue as per the accounting standard. You need to discuss what treatment the management has performed and whether that is correct or incorrect. Or for example, there are some risk involved in that incorrect treatment. So materiality, that means You need to compare it with the profit, you need to compare it with the asset, and you need to compare it with the revenue. But obviously that depends that which benchmark is being given to you in an exam question. If it is the profit figure, then we see 5% or more of profit is considered to be material. If it is assets, then 1% or more of assets is considered to be material. If it is revenue, then 0.5% or more is considered to be material. So, but in any ways, you can change the sequence. It's not important that you first start with the materiality, and then obviously whenever you're starting, you need to discuss the treatment as per standard. And again, if you don't remember the standard, whether it is auditing standard or accounting standard, you are not supposed to write the name and the number of the standard. If you remember that, then it creates a good impression. But for example, if you're not writing that, then that won't cut any marks in the exam and won't earn you even any marks for writing the names. You earn the marks writing on the correct treatment, not based on the names and the number of the standard. So accounting treatment as per standard, and then the treatment what the management has performed, or they should have been performed, is the correct treatment. And what they did, for example, if they have not discussed what they did, then we obviously can skip this part. And then if the risk of the incorrect treatment, when obviously when you will be writing this when you are not aware what they have performed. So you will be writing, for example, if this treatment is not performed, then there is a risk of understatement or overstatement. So you in risk of incorrect treatment is related with the under slash overstatement. And then materiality. So if you start with the materiality, it's fine. If you start with the accounting treatment as per standard that should have been performed, and then discussing what they have done, or for example, if that is not the case, then the risk thing, then it's fine. There is no hard and fast rule to follow the sequence. Uh, that's it. And then the second part, as I've shown you, is the audit evidence you would expect to find, because you are at the review stage. The audit work has already been performed. The things has been brought to your attention. So basically, what you're doing is you're looking at the work which your team has performed, and the evidence already has already been gathered. So the wording would change a bit. And now this was a sample question which I gave you in the slides, and I'll just go to the uh, audit procedure, how the normal procedure looks like, and how to write in the review stage. So for example, if it is a substantive procedure, when you're gathering the evidence, says obtain and review the board minutes to assess the management commitment to sell the asset. And when it has already been done, then a copy of board minute at which the disposal of the properties was agreed by the management, because this has already been done, that when they obtain and review the board minutes, they will take a copy of it and they will attach in the audit file. So basically what you're expecting, there should be a copy of the board minute in the audit file at which the disposal of the properties was agreed by the management. So obtain written representation from management or on opinion that the assets will be sold within 12 months. This is when you're gathering the evidence, you do that. You obtain the written representation. But when it has already been taken from them, this would be in the audit file. So you would be writing written representation from management. So just start writing with the written representation. Don't not obtain and anything else, because you are expecting to find that thing within the audit file. So this is something very, very important to understand, that the wording would change a bit when you are writing the review procedures or audit procedures at the review stage. Okay, so let's start the question. Mati Company is a listed transport company. This past paper has been downloaded from the ACCA website. Just looks like a bit blur, but when you go to practice platform, you can see a better version of it. Mati Company is listed a transport company which provides train and bus services for the public on a national basis. The audit of the MATI company for the year ended is 31st March 2005. This is the reporting date. Is nearly complete, and you're reviewing the audit working papers. MATI is a new audit client for both for Bath and Company, sorry, this year. The previous auditors has uh, issued an unmodified opinion on the financial statements. Matty Company's draft financial statement recognized revenue of 60.1 million. This was 94 million in the last year, so that you can see it is decreasing. There's a decreasing trend in the revenue. Profit before tax is 10.5 million. This was 22.1 million last year, so it's decreasing. And then the total assets 28.4 million, which was 31.1 million. So this is decreasing as well. So there's a decreasing trend in the company's financial extracts. And these will be used for the calculation of the materiality. This is being given to you for the calculation of the materiality. The audit supervisor has brought the following matters to your attention. Railway operating license and going concern. Okay, fine. Now, first of all, what is going concern? The going concern is that the entity can continue for the foreseeable future. This is the going concern assumption. You know that because you've studied this thing so many times in your basic papers. So the going concern assumption is that the entity can continue for the foreseeable future. Now, what is that foreseeable future? Foreseeable future is 12 months from the reporting date. Okay, so and if the company is a going concern, then financial statements should be prepared on the going concern basis. And if it is not a going concern, then financial statements should be prepared on the breakup basis. So according to this, the auditing standard, basically, it requires the auditor to assess the adequacy of the disclosure of the going concern. That if they are, for example, a going concern, then what disclosure they have provided. If they are not a going concern, whether they have chosen the correct basis of the financial statements. If there are any material uncertainties involved, whether they have given the disclosures of it. So let's see what we have in the question. Matty Company has operated a national railway service for the last 19 years. Matty Company's national railway operations have been subject of adverse publicity over the last 12 months in relation to the unreliability of its services, including the late running of its trains. So basically, they are not following the schedules, they are being late, and it says the adverse publicity. Now, the publicity means they are having the negative press reports, the negative press conferences, so things like that. So negative publicity means that they're having the negative press reports, a negative discussion within the media. Okay. The license to operate the national railway is put out to tender by the national government every 5 years. So the license is for 5 years. When it is closing, they again announce tender and then people submit the tender for it. Matty Company's existing license is due for renewal on 28th February. So you can see it's 31st March 2005, which is their reporting date, and their closing date of the renewal. That means the license will expire on 28th February 2006. So you can see it's how many months. So from March to, yes, it's 10 months from there. Uh, and yes, okay. So it's 11 months probably. The current tendering process is approaching completion, and despite the recent operational problems, Matty Company was informed that the company was the government preferred option. The government is still considering them for the tender. This was on the understanding that the company would address the recent criticism of poor service levels. The company was also informed that the tender would still be subject to the detailed review. The National Railway generated revenue of 40.2 million and contributed pre-tax profit of 11.2 million. Now, this is the extract of this particular sector, so which you can compare with the complete revenue of the company. So how you can do that? It's simply uh, 40.2 million divided by 60.1 million, and then simply 11.2 million divide by 10.5 minutes, so it's more than 100%. So you need to compare it and calculate the materiality. So how you can write it? The revenue earned from what's the name of this sector? uh, National railway operations. The revenue earned from the national railway operation represents this percentage, and show the working in the bracket. So here you write the percentage, and then you show the working how you have done it. So railway operation represents this percent of the company's total revenue. With what's the name of the companies? Matty companies total revenue. Similarly, the profit before tax, PBT, rightful in the exam, represents this percentage, again shown in the bracket, of the Matty company's profit for the year. So this is the materiality part. This is the materiality part. Okay, then you will be writing the going concern thing. Okay, so for example, IS1, presentation of the financial statements, describes that financial statements should be prepared on going concern basis if the entity is a going concern. The going concern is simply defined as the company's ability to continue in the foreseeable future, which is 12 months from the reporting date. Okay, this is the standard. If there are any material uncertainties, this should be disclosed as per IAS 1 and ISA 570. And if you don't remember, so you can just write according to the relevant standard. Okay, so the license is due for renewal on what date? On 28th February 20x6. Okay, what is the year end? The year end is 31st March. So basically it starts from 1st April to 31st March. So it's 11 months. Due for renewal 25th, 29th February 2006, which is 11 months from the reporting date. Matty company is operating from last 19 years, and even in this situation got some assurance from the government that they are, or they use the term, they are, where is that? Yes, they are the government's preferred option. Assurance from the government that are they are their preferred option. Despite of this, the tender process is subject to the review. In case Matty company did not get the renewal, their going concern status will be doubtful because the railway operations represents significant proportion of companies' financials. Okay, so this is how you are supposed to write, starting with the materiality. This is the materiality thing. Okay, this is the materiality one. And then you started with the standard and then the treatment of the standard and then related with it with the case study. Okay, that's it. The next part, this is the first part, matters to be considered, including the materiality, including the accounting treatment and the impact of that accounting on the financial statements. And then the next part is the evidence. Evidence you expect to find in the review of the audit working papers. Now, you're supposed to write the procedures related to the going concern. What were the going concern procedures? That you need to see, okay, uh, their cash flow forecast, whether it shows a favorable position for the next 12 months, which is the foreseeable future, the cash flow forecast. And then the discussion with the finance director, that what basis they have used while taking the cash flows within their cash flow forecast, because they are accounting estimates. Okay. And then take out the procedure from the case study. It says the adverse publicity. Then you need to see the press reports, the press cuttings. Okay. Then it says it was the government's preferred option. Okay. So now obviously if they're saying it, they would be having any correspondence, communication with the government. So how you can write it, again, just writing the procedures for you. So first of all, review of press reports to evaluate or to see the significance of the issues highlighted. So review the press reports to evaluate or see the significance of the issues highlighted in the press reports. In, in the press reports. Okay, this is number one. Okay, number two is review of. Now, if you were gathering the evidence, then the wording would be review the press reports. Now, because this review has been done and the copy of that press report is in the audit working papers. So review of press reports, review of any correspondence with the government to confirm that MATI is their preferred option and chances of the renewal of license. Similarly, a copy of board minutes for the evidence of management's discussion on this significant issue, what the management is saying regarding that, like their board minutes, etc. So this is how you're supposed to write the procedures. Okay, moving further. We have the next one. Okay, so we have the next one. It says, yes, purchase customer list. On 1st April 20x4, Matty company paid 6.9 million to acquire the customer list of Jess Coaches, a business which was terminating its operations. So they have purchased the list. So this is the purchased intangible, comes in IAS 38. Okay, Jess Coaches hires out coaches and drivers to private and public sector customers. This customer list includes many highly reputable listed companies and government bodies with a customer relationship more than 30 years. On the basis of this trading history and the associated customer loyalty, the management of Medi assessed the useful life of the customer list as indefinite. So like IS 38 describes that if the life of any intangible is indefinite, then they are subject to the impairment review. Right? Okay, if the life is definite, then it should be amortized. If the life is indefinite, then obviously it should be tested for the impairment. And the impairment means that you need to compare the carrying value with the recoverable amount. The recoverable amount is higher of its value in use and the fair value less cost to sell. And in the calculation of the value in use, the future cash flows are being taken, which are discounted using the discount rate. The draft statement of financial position recognizes the customer list as an intangible asset at a total carrying amount of 6.9 million. In the second half of the reporting period, however, two of Jess Coach's largest clients moved to a new competitor. The management of multi-company believed that while it would be difficult to identify a sales value to the customer list, they estimate the value in use to be 7.2 million. So obviously we have now the carrying amount. So why they have given it the carrying amount? Because when you're writing the procedures, you will be writing the procedure relevant to the carrying amount. So how we can confirm it for how much they have purchased it. So obviously we are going to see the agreement to confirm the purchase consideration of 6.9 million, and then the copy of bank statement to confirm the same amount has been some same amount has been transferred to the company for this purchase of the intangible. And then for the value in use, The value in use, you will be asking for a copy of the cash flow forecast. You'll not be asking, you will be looking into the audit file, a copy of the cash flow forecast to assess the value in use, and the discussion with the management to ask the basis of the cash flows they have taken within the value in use for the calculation of the cash flow for in the cash flow forecast. And then the treatment is that again I is 38. So you need to again calculate the materiality, and then writing that okay, if they have not tested the asset for impairment, then impairment is not charged, then the asset is overstated. So this is how you are going to write, and I hope you understood this topic, usually tested in the exam from the completion and review stage. Do remember the requirement. The requirement is the matters to be considered and audit evidence you expect to find. So matters to be considered, we have a particular format of it, how you can write it. So this is the materiality accounting treatment performed, and the impact on the financial statements. And when you're writing the audit procedure, make sure you are not writing it from the gathering perspective. You're writing it from the review perspective.